Hi everyone, today let's take a quick look at Apple. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So about a week and a half ago, Apple had an amazing day. They went up about 4% on the back of some news saying that they are going to announce the new M4 chip. And Apple had been struggling on the year. They were down about 4%, and now they are down more actually after this announcement. But we got a really sharp pop on this announcement that they are going to refresh a lot of their products with this new chip, and it's in an effort to benefit from the AI boom within Apple products. Apple's been a bit of a laggard when it comes to AI. It seems like they have all of the potential to benefit from AI, but they really haven't been doing it yet, and this is their first look into the AI space. And if Apple starts to generate AI, the valuation of this company could go up by at least a quarter in my opinion. And moving over to the charts here, this is Apple on the monthly chart. This is the entire existence of Apple. You can see on a split adjusted basis, it came out around 12 or 13 cents. You can see it was actually not super great initially. 1981 all the way to 1997-98, it was flat. Dot-com bubble, bounce, came back down to that 25 cents area after getting all the way up to $1.20. And then since then, it's basically been on a run. So it bottomed out here in 2003. Rallied all the way up to its most recent highs. It doesn't mean there haven't been pullbacks. You can see here 2007 into 2008 retested that 55 EMA on the monthly chart, and then we've done that a few times. Came back in here 2016, again here 2019, and then since that 2019 dip, it's actually been on a really solid run. It hasn't tested that 55 for a long time, but it seems like we might be headed in that direction right now. We've had 4 months in a row of bearishness on Apple, which is pretty unusual. You don't get 4 months in a row very often. But that would bring you down to that 140.40 level. Seems like a better opportunity for Apple. That would also bring you right into this trend line. So you can see the trend line sitting there around 138, 139, right in that zone. Momentum bearish. RSI definitely bearish below the 50 line, below the SMA. Everything looks weak. You can see we are taking out this midpoint if you're calling this a double top, which it very much looks like a double top on the monthly chart. We've taken out this previous high as well. And you can see if we get into that 140 area, that's right here at the lows from September of 21. So again, that would be an interesting level. And then looking at the volume profile here, you can see we're in an area of high volume. We've now broken through that area. We're in this zone of lower volume, and then you can see higher volume back down here around 145 to 147. So you could find a bounce here. I have a level there at 146 as well. But usually when you have levels that are just a little bit above kind of that longer term zone, you would overthrow them, tag those lows, and then we'll see if we end up getting a little bit of support. So right now, definitely bearish on Apple on the monthly chart. And then moving over to the weekly chart, you can see that 144 EMA sitting there at 163.78. Again, you can see that same volume profile. A little bit of a dip in here, higher volume zone down around that 146 level. Got the 200 in there. That could generate some support. That's at 152.06 on the weekly. Momentum and RSI still very bearish. It seems like we're going to head towards that oversold conditions. We're currently at a 38. And last week so far, we went from a 46.73 all the way down to a 38. So about 9 points on RSI if we get another week like we did, which would bring you right back into this zone here at that 153. Then we'll see what happens. It is up a little bit pre-market here on Monday, but this structure still looks very bearish, and it's definitely concerning. 144 could hold. Certainly a level to pay attention to. 165.71 is the level I'm watching right now as well. But looking at the daily chart, you can see this just looks terrible. You have a high, lower high, big breakdown below this level of structure. Then you have a short-term rally. Kind of looks like a bear flag. Broke down from that level. Ended up coming back, retesting on that AI chip announcement. And then look at this, 5 days in a row of straight downward price action. Absolutely bearish. Took out that 165.70 level. Momentum and RSI bearish, big volume on that selling candle. Do have a little bit of trend support down around 157 here on the daily chart, but again, it seems like this structure is going to break down some more. And we talked about it in the Sunday video as well. It just looks bearish on the longer time frames. And then moving over here to the Tasty charts, you can see that same movement on the monthly chart. We're below the mid-range, so that first ATR band would be 150.13. Certainly fits with that other thesis around that 152 area. ATR stop is currently sitting all the way down at 136.70. And then that 55 EMA that we talked about, that's sitting at 140.90 on the monthly chart. So right in that same zone. Momentum still rolling to bearish. This is the volume weighted MACD. And on this chart, we actually have only had 2 months of bearishness, and it seems like this is going to continue at least a little bit. Last time we had a move like this, you can see it was that move here in July, which was pretty substantial. Came to that first ATR band and then ended up bouncing from there. So definitely makes sense on the monthly chart. We could get into that zone. And then looking at the weekly chart, this looks a little bit more extended. You can see the bearish conditions, so your bearish ATR stop on the weekly chart is at 188.69, and then that lower ATR band, that would be your price target, currently at 159.59, and that's also right on top of that 144 EMA at 159.49. So right in that same zone. Seems like you're going to get at least a little bit more bearishness this week. Hit that lower ATR band, and then we'll see what happens. You can see we're a little bit deeper on this downswing on the volume-weighted MACD. We've already had a big move down, slight retrace, and then a bigger move down. And then if we touch that zone, it's absolutely possible we get a bit of a bounce. You can see here we've had a move into that same zone before. Ended up resulting in a really strong rally from that level. Obviously, it's not quite the same setup. You can see we're lower in the ATR range. And on this move, we actually overthrew that 144. At this point, you would hope for a bounce right on the 144. But you can see the lower time frame that we go to, the more bearish that it looks when you're talking about the monthly chart versus the weekly. And then you can see here on the daily chart, it's actually a little bit more mixed. On that AI chip announcement, we took out those ATR stops to the upside, which were right around 175.76. We also hit that 55 EMA on the daily chart, rejected from that level. And because we reversed conditions on that move, now we're testing the ATR stops to the downside, which is technically a bullish condition. And those are at 164.32, which is the exact zone that we tested on that Friday session. And now we have a slight gap up to start off the Monday session, which is interesting. So that actually looks a little bit more bullish here on the daily chart going into the start of this week than it did on that Friday session. Obviously, this is still very much a downtrend. All the EMAs and SMAs are in a consolidation above price, and you can see the ATR bands are sloping to the downside. Your lowest ATR band right now is at 161.26, which would be your short-term price target for the daily chart. You can also see the last time we had volume was on those two really strong candles to the upside, and on this down move, there wasn't a ton of volume, indicating that this might be short-lived. If we hit this ATR stop and bounce, maybe we could start to see a little bit more reversal of conditions and higher price. And lastly here, I do want to touch on the 4-hour chart because it does tell a pretty interesting story here. You can see that move well overthrew that upper ATR band. This is more common on the lower time frames when you get those spikes on news. Once we hit that band though, we pretty much went sideways, and then we ended up breaking down from that, and we've been grinding along that lower ATR band, which is definitely concerning. You want to see this get above that 8 EMA and hold, which is at 165.79. Right now we're not doing that. It seems like it's testing it on those pre-market candles, but if it rejects again from that level, then your lower ATR band would be around 163.36, which would give you a couple of dollars of downside potential. So definitely mixed conditions. I think I would lean towards the bearish side, but that daily chart definitely is interesting, and it does give you an idea that perhaps Apple is set to bounce from that zone. Moving over to the options, you can see the IV rank is very high at 93, so that gives you some options potential. On the 4-day chart, you can see price finished right around that 165 level. You can get about $1 to $2 on the 4-day options expiration, which is pretty decent. If you're looking to get into the stock around that 162 area, might as well sell the put option for about $2. Might be a little bit lower if we end up opening higher on that pre-market move, but $2 seems reasonable. It's a little bit more than 1% on a stock at 165. And then you can see here we have earnings after hours on May 2nd. So if you go out any further than that, you're going to be impacted by earnings, but that does increase the volatility. You can see you can get $2 at 160 for 11 days from now. So several percentage points out of the money, still getting more than 1% on that option. Again, gives you a little bit better opportunity and a little bit more protection, but you do have to hold the option through earnings potentially. So something to keep in mind. And then if you're trying to go a little bit further out, the furthest I would say makes sense is about 39 days. And you can actually see that doesn't make a ton of sense here. Only $2.27 at the 155 option. You're better off taking the shorter term option and then potentially rolling out in time, or just assuming the shares and selling covered calls. The longer dated options right here don't seem to give you a ton of advantage. Over the earnings, you can get almost the same credit in much less time. And that allows you to have another iteration on the option side if you're trying to collect more credit. Let me know down in the comment section what you think of Apple. Is it an opportunity at this price? Are you looking to buy Apple? And where are you looking to get into the stock? Or are you just being patient right now? Definitely like and subscribe if you got any value out of this video. If there's any other stocks you'd like me to cover, put those down in the comments as well. Otherwise, hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.